Welcome to the Deep Dive. All right, today we are diving into a space that's absolutely buzzing, the world of AI startups.
Buzzing is maybe an understatement?
Right, forget the narrative that it's only the giants like, OpenAI, Google, Microsoft that matter.
Yeah.
I mean, while they're definitely setting the pace, the sources you've shared paint a picture of, well, a really dynamic, rapidly evolving ecosystem of smaller players carving out some serious value.
It's not just buzzing, it's booming. The numbers are pretty hard to ignore, actually. We're seeing around $100 billion in venture capital funding flowing into AI startups just this year, 2024.
Wow, $100 billion.
And that's an 80% jump from 2023.
80%, that's a
Yeah.
massive surge of confidence in capital, isn't it?
Yeah.
So our mission here today is to take a deep dive into your sources to really get a handle on this landscape. Who are these trending and, successful startups?
Mm-hmm.
What are they actually building? How are they making money? And crucially, what patterns for success can we learn from them?
Mm-hmm.
And maybe just as important, what are the major pitfalls everyone needs to watch out for?
Exactly. We'll look at companies building the core foundational models, those creating applications on top, the platforms and tools enabling development, and even the underlying infrastructure. It's about figuring out not just what they're doing, but why some are succeeding in this, let's face it, pretty crowded space.
Okay, let's start by trying to decode success then. The sources point to a few clear patterns emerging from the startups that are, getting traction and significant funding. The first one, and maybe it sounds obvious, but it's often missed, is solving real, specific problems.
This is absolutely fundamental. It's easy to build something with AI these days, relatively speaking, but it's much harder to build something that genuinely solves a painful problem for a specific user or a specific business.
Right.
Take Perplexity AI, for instance. Instead of just, building another generic search engine, they're tackling the specific problem of information overload. They give you direct answers, but crucially, with citations.
Yeah, that citation part is key. And the sources really highlight vertical AI here too. Companies that are focusing on deep, specific industry needs, like Harvey AI, building AI specifically for lawyers. They're seeing huge investment.
Exactly. They aren't just general AI companies. They have that deep domain expertise in law, in Harvey's case. They know the exact problems lawyers face day to day.
And that expertise, that domain knowledge, it helps them build that second critical pattern the sources talk about, building defensible moats.
Yeah, precisely. Because with powerful foundational models becoming more accessible, just putting a nice interface on top what people call a thin wrapper, well, it just isn't enough anymore.
Why not? What's the risk there?
Well, the tech giants can easily copy you, or your competitors can replicate it almost instantly if it's just a thin layer over an existing API. There's no lock-in.
Okay, so what kind of moats are actually working for these startups? The sources point to a few things, right? Like proprietary technology or maybe unique data sets.
Yes. Or that deep domain expertise we just mentioned. Building network effects is another one. Think about Hugging Face and its massive community. That's a huge moat. Cultivating a strong brand and trust is also key. Anthropic's really intense focus on AI safety, for example, that's becoming part of their brand, their moat.
Or just having a vastly superior user experience. I think Perplexity AI comes up again here with its clean interface, the way it presents information.
Right, it's about creating something that isn't easily copied or replaced. And for many of the successful companies we're seeing, that often means a strong enterprise focus.
Makes sense. Businesses have complex problems, and crucially, they often have the budgets to pay for real solutions. The sources mention that the majority of companies on that CB Insights AI 100 list are targeting the enterprise market.
Yeah, it's a huge segment, but being enterprise ready involves more than just having a sales team, as you know.
Right. What does it really mean according to the sources?
It means addressing really rigorous security and compliance needs. That's paramount, especially in regulated industries. We see examples like Pinecone for vector databases, Sierra for customer service agents, or Articulate AI, which specifically targets regulated sectors.
So security compliance.
What else? Scalability is huge. Seamless integration into existing enterprise systems, that's often a make-or-break factor. Customization capabilities. And, maybe most importantly, clearly demonstrating a return on investment and ROI.
Ah, the ROI. How are companies demonstrating that?
Well, Sierra's business model is a fantastic example here. The sources mention they use outcome-based pricing. They only charge enterprises when their AI agent successfully resolves a customer issue.
Oh, it's clever.
It really is. It aligns their success directly with the customer's success. It's a very clear measure of value delivered.
Yeah, that's fascinating. It kind of shifts the risk and makes the value proposition crystal clear, doesn't it? Okay, another pattern for success mentioned is simply having strong teams and talent. Sounds basic, maybe, but in AI.
It's critical. The talent war is incredibly intense. The sources note how many successful startups are founded by people with really deep technical backgrounds, folks coming out of places like Google DeepMind, Meta AI, or OpenAI alum.
Right, or individuals with significant industry experience who understand the problems firsthand.
Yes, that pedigree, that fundamental understanding of either the underlying tech or the specific industry problem you're trying to solve, it's just crucial. And finally, strategic funding plays a huge role.
And it's not just about the sheer amount of capital, although the numbers are eye-watering. These mega rounds. Mistral AI recently raised over $1 billion, right? Valued at something like $6.23 billion.
Yeah, and Anthropic Series E valued them at a staggering $61.5 billion. The scale is immense.
But it's also about who is investing, isn't it?
Absolutely. Having top VCs like Andreessen Horowitz or Sequoia provides credibility, networks, expertise. But then there are the strategic investors, NVIDIA, Microsoft, Google, Amazon, Salesforce. They can bring not just capital, but crucial partnerships, distribution channels, or cloud credits.
Like Anthropic partnering with AWS or Mistral AI with Microsoft Azure.
Exactly. Those partnerships give them resources and reach that are incredibly hard for a standalone startup to get otherwise.
Okay, so these patterns, solving a real problem, building a moat, focusing on the enterprise, having a top team, and securing strategic funding seem to be key. And we see them across different types of players.
Yeah, from the foundational model builders like OpenAI, whose valuation gets linked to Microsoft, sometimes up to $300 billion, and Anthropic, 61.5 B, through to application builders like Perplexity AI, sources suggest a potential $14 B valuation eventually, and Synthesia for AI video, $2.01 B.
And the platform players, too.
Yep.
Like Pinecone for vector databases, the $750 valuation mentioned, or Cohere, which focuses on enterprise AI platforms, $5.05 B.
Right. Cohere is interesting, too, focusing on private data, with something like 85% of their revenue reportedly coming from private deployments. They all, in different ways, demonstrate these success patterns. Even the enablers, like Hugging Face, the community hub, or Replicate, simplifying model deployment, or LangChain frameworks for LLM apps.
Okay, that gives us a pretty good picture of what success looks like, or at least the common ingredients. But, as you hinted earlier, the vast majority of AI startups, they don't make it. The sources indicate failure rates potentially as high as 90%.
It's a brutal landscape, no doubt about it. And the pitfalls are often kind of the flip side of those success factors we just talked about. The first major pitfall is definitely the lack of a defensible moat, leading to being just a thin wrapper.
Okay, let's dig into that a bit more. If I'm just building an app, say, directly on top of OpenAI's API, what are the specific risks? Why is that such a common failure trap, according to the sources?
Well, first, the underlying API provider, the giant, like OpenAI or Google, can simply decide to add your core feature directly into their own product. They have the resources, the engineers, the direct access to users. Your feature becomes just a feature.
Ouch. Okay.
Second, your costs are entirely dependent on their API pricing. And that pricing can fluctuate wildly or change strategically, which can completely destroy your unit economics overnight. You have no control.
Yeah, I've heard the cost fluctuation is a real problem.
It absolutely is. And third, anyone else can access the same API and build something very similar very quickly. So you face intense competition, often with very little differentiation. There's nothing really unique or sticky keeping users with your specific wrapper.
That makes total sense. You're completely exposed, really. And speaking of costs, another huge pitfall the sources highlight is the crushing weight of high compute costs and unsustainable unit economics.
Absolutely. This is a fundamental difference from a lot of traditional software. Traditional SaaS might have very low marginal costs once the software is developed, so even one more user is cheap.
Right.
But with many AI applications, especially those using large models, you require significant ongoing investment in expensive GPUs, energy, cloud resources, per user interaction. Inference isn't free.
So adding another user or even just a user using the product more might actually cost you a lot more directly than just spinning up another standard server instance.
Exactly. This makes achieving profitable unit economics, where the revenue you get from a user is significantly higher than the direct cost to serve them, incredibly challenging for many.
And this leads to
It's why you see some companies with huge funding rounds still struggling to generate revenue that actually outpaces their operational burn rate. They become what some commentators are calling zombie corns.
zombie corns.
Yeah, unicorn valuation on paper may be hundreds of millions or even billions in funding, but they're not actually building a sustainable business model because the underlying economics don't work yet. Even Perplexity AI, which we noted for success, is highlighted in the sources for using a mix of different LLMs, partly as a strategy to try and manage these very compute costs.
Fascinating. Okay, another shadow looming over startups is, well, the shadow of tech giants themselves. It's not just about them providing the APIs.
Right. They don't just build the foundational models and provide the cloud infrastructure. They are also aggressively building their own applications and tools that can compete directly with startups in almost every category.
So even if you have a moat, they might just build something similar and bundle it.
Exactly. They have immense resources, established distribution channels through their existing products and platforms, and they can integrate competing features seamlessly. If a startup becomes too reliant on one giant's ecosystem, say, building exclusively on Google Cloud and using only Google's models and tools, they face significant platform risk.
Platform risk, meaning the platform provider can change the rules, compete with you, or even cut you off.
Pretty much. The sources even note how acquiring AI companies can be difficult for giants, too. The example given is Intel buying Habana Labs, which didn't necessarily translate into seamless market success within Intel's broader structure. It's complex even for them.
It really is like trying to build on constantly shifting ground. The sources also mention that while AI adds these unique, often costly challenges, the common startup pitfalls are amplified.
Definitely. All the usual reasons startups fail are still very much in play. No real product market fit, running out of cash, having a weak founding team, a flawed business model, poor sales and marketing execution.
The classics.
The classics, exactly. But the high costs, the technical complexity, and the sheer speed of change in AI just make these standard pitfalls even more lethal. You have less room for error.
And there's a particularly cautionary tale in the sources related to AI washing and misrepresentation. This idea of overhyping or even outright faking what your AI can do.
Oh, yeah. The story of Builder.ai is quite striking and serves as a stark warning. Once valued at, I think, $1.5 billion,
Well,
it collapsed pretty dramatically amid serious allegations. The claim was that its much-hyped AI work was allegedly being done primarily by human engineers, reportedly in India.
that's breathtaking. That's not just hype, that's potentially outright deception.
It highlights just how critical trust and transparency are. If you mislead investors, customers, and the market about your core technology, especially when the hype is so intense, the fall can be incredibly hard and fast.
Absolutely. And finally, a pitfall that's maybe less dramatic, but steadily growing in importance, is navigating the complex and constantly evolving regulatory and ethical hurdles.
Yes, this is becoming a major factor. Issues around data privacy, potential bias in AI models, security standards, specific compliance requirements in industries like finance or healthcare.
It's a minefield.
It can be. And ignoring these issues or not building with them in mind from the start can lead to lengthy delays, expensive redesigns, losing customer trust, or even being shut out of certain markets entirely. The sources mention companies like Tally and Ease facing these kinds of regulatory or compliance challenges.
So when we look at case studies mentioned, like Artifact, the news app from the Instagram co-founders, which struggled with market fit and focus,
Right.
or Ghost Autonomy, which was working on autonomous driving, a really capital-intensive moonshot that ultimately failed due to funding challenges and uncertainty. They really serve as real-world examples of these pitfalls in action, don't they?
They absolutely do. They underscore that having cool AI tech is nowhere near enough. You need a viable business, a clear market, sound economics, and the ability to navigate all these real-world operational, ethical, and competitive challenges.
Okay, so it sounds like a daunting landscape, especially for smaller teams, maybe ones that aren't sitting on those mega funding rounds we talked about. How can smaller players possibly thrive against these giants and navigate all these pitfalls?
That's a great question, and the sources do offer some compelling strategies for staying, let's call it, lean and mean. The first one is powerfully leveraging open source.
This feels like a crucial equalizer, doesn't it? Instead of needing billions to train your own massive foundational model from scratch.
Exactly. You can access incredibly powerful, often state-of-the-art models like Meta's Llama, Google's Gemma, or models from Mistral AI that are released under open source licenses.
And it's not just the models, right? It's the tools, too.
Precisely. Combine those models with the wealth of open source tools, libraries, and frameworks available on platforms like Hugging Face or using frameworks like LangChain. This dramatically lowers the barrier to entry. It allows small, agile teams to build remarkably sophisticated applications without needing massive internal R&D budgets dedicated to basic AI infrastructure.
Platforms like Replicate are also mentioned, making it simpler to just run these open source models via an API.
Yeah, they abstract away a lot of the deployment complexity, making it really accessible for developers. Pay-as-you-go compute for powerful models.
I saw a fascinating stat in the sources, something about a recent Y Combinator cohort, where maybe a quarter of the startups had code bases that were almost entirely AI generated.
Yeah, it really speaks volumes about the power of these open tools and also AI coding assistance. It lets small teams move incredibly fast, punching way above their weight in terms of development speed.
So the takeaway is leverage open source to build fast and focused resources elsewhere.
Exactly. It means small teams can focus their limited time and money higher up the value stack on understanding the user, designing the product experience, solving the specific user problem, rather than trying to reinvent the core AI engine itself. Which leads nicely into the second strategy, identifying and dominating niches.
Right. Don't try to compete head-to-head with OpenAI on building the next general chatbot or Google on search. Find a specific industry, a specific workflow, a particular type of user where AI can make a massive difference.
And where big tech either isn't focused or where a generalist AI solution just isn't good enough. This is where that deep domain expertise we talked about earlier becomes a huge competitive advantage for smaller players.
Like the Harvey AI example for lawyers again, or ZyThera mentioned for protein screening.
Precisely. A small team that deeply understands, say, a specific legal discovery process or the nuances of drug discovery in biotech can build a vastly superior, tailored AI solution for that specific niche than a large generalist tech company could easily replicate. That focus effort leads to efficiency and creates real defensibility within that vertical.
And tied closely to that niche focus, I imagine, is intensely focusing on application layer innovation and user experience UX.
Absolutely. If the core AI model itself is becoming more accessible, maybe even somewhat commoditized in certain areas, then the real differentiator, the real value you create, often lies in how you apply that AI. How easy, how intuitive, how effective is that experience for the end user?
So the how becomes more important than the underlying what, assuming the model is capable enough.
I think that's often true for application-focused startups. Perplexity AI, again, is cited not just for its AI capabilities, but for its clean interface, the way it presents information clearly with those sources. That UX is a big part of its appeal. Small teams can often be incredibly agile and user-centric here, iterating quickly on the product experience in ways that larger, slower organizations might struggle with.
Okay, makes sense. Now, for teams that don't have or maybe don't want those massive venture capital injections, the sources also highlight bootstrapping and capital-efficient growth as key strategies.
Yes. It's crucial to remember that not every successful tech company needs to be a unicorn chasing hypergrowth funded by billions in VC money. Especially not if it leads to becoming one of those zombiecorns we discussed, burning cash with no path to profitability.
So what does capital efficiency look like in AI?
It means building a lean, minimum viable product, MVP, getting it in front of real users quickly, focusing on generating actual revenue early on, and ensuring you have sustainable unit economics from the start, or a clear path to getting there.
And leveraging those cost-effective open source tools we mentioned.
Exactly. Using pay-as-you-go infrastructure like Replicate, using open models, avoiding massive upfront investments in hardware or R&D where possible, staying lean.
And the final strategy mentioned for smaller teams is building a community. How does that help?
It can be incredibly powerful, especially but not exclusively for open source projects like Hugging Face or LangChain. An engaged community provides invaluable feedback, helps identify bugs, suggests features, drives adoption through word of mouth.
And creates advocates, right?
Definitely. Users become advocates. But even for closed source application builders, actively engaging with users on platforms like Reddit or Discord or Hacker News, sharing progress transparently, building user groups. It can be a very cost-effective way for a small team to build momentum, loyalty, and gather insights that help them outmaneuver larger, less connected competitors.
Okay, so it really seems like the playbook for smaller players, according to the sources, is about smartly leveraging the democratizing power of open source AI and then focusing intensely, almost obsessively, on solving specific problems for specific users in niches that the giants aren't serving effectively or can't serve as well.
Precisely. Find your corner of the universe, build something truly great for that corner, deliver an amazing user experience, and stay lean, agile, and close to your users. That seems to be the path.
So looking ahead now, the sources also hint at what might be coming next in this incredibly fast-moving AI landscape. What are some of the emerging opportunities or trends we should be watching for?
Well, one clear trend is likely even deeper domain specialization. As the general models get more capable, we'll see them applied with increasing sophistication into highly specific fields. AI driving new discoveries in science, optimizing complex manufacturing processes, augmenting creative work in really nuanced ways.
And the fusion with other technologies seems poised to accelerate too, right? Combining AI with things like robotics, the Internet of Things, IoT, maybe synthetic biology.
Absolutely. That fusion is where entirely new applications and capabilities will emerge, things that might seem like science fiction today, but could become reality surprisingly quickly. Think truly autonomous systems, highly personalized medicine driven by genomic AI.
We'll also likely see the continued development of more capable AI agents and autonomous systems, building on the kind of work companies like Sierra are doing with customer service agents, but extending to more complex, multi-step tasks across different domains.
Yes, agents that can reason, plan, and act more independently. And alongside that, edge AI running powerful AI models directly on devices rather than always in the cloud will become more important for real-time intelligence and privacy. And of course, hyper-personalization across all sorts of applications.
And amidst all this rapid technological change, it seems clear from the sources that proactively navigating those regulatory and ethical hurdles we talked about isn't just going to be a compliance task. It's actually becoming a competitive advantage.
I think that's absolutely right. Building trust, ensuring safety and fairness, being transparent about how AI systems work, actively working to mitigate bias doing this from the ground up, as companies like Anthropic with its safety focus or Sierra with its responsible AI principles emphasize, is becoming non-negotiable for long-term success and market acceptance.
It's not just nice to have, it's essential for building an enduring brand and maintaining user trust.
It really is. Ultimately, the core principles for building enduring value in this dynamic AI era seem to boil down to the fundamentals. Amplified by the specifics of AI, solve real important problems. Build genuinely defensible moats, whether through tech, data, expertise, or community. Ensure you have sound business fundamentals and unit economics. Stay adaptable in the face of rapid change, and critically, prioritize trust, safety, and responsibility in everything you build.
Wow. Okay, this deep dive into the sources has really laid bare both the immense complexities and the incredible opportunities in the AI startup world right now. It definitely feels like a gold rush, as the initial numbers suggest, with staggering potential. But success clearly demands far more than just having access to cool AI technology.
Yeah, it really requires solving genuine problems that people or businesses are willing to pay for, crafting smart, sustainable business models, building real differentiation in those modes, and just solid execution against some very large, very well-resourced competitors and a lot of noise.
It's a landscape where innovation is happening at, well, breakneck speed, but that high failure rate is a constant sobering reminder that sustainability requires deep insight, careful strategy, and a whole lot of resilience.
Couldn't agree more.
So for you listening, maybe a final thought to mull over from this deep dive. Given this incredibly rapid pace of AI development that we've discussed, the high costs often involved, and the sheer scale and power of the established tech giants, is building a truly resilient AI company today more like navigating a constantly shifting, turbulent river where you need to constantly read the currents and adjust your course? Or is it more like trying to lay down solid railroad tracks towards a specific destination, but a destination that might actually move or change before you even get there?
That's a great analogy.
What does that turbulent, maybe uncertain landscape mean for how you might approach using AI in your own work, or thinking about new ventures, or perhaps even considering investment in this incredibly dynamic space?
Yeah, there's certainly a lot to consider and navigate right now. Definitely encourage you to keep exploring these sources and the ideas we've discussed today. The journey into really understanding AI and its profound impact is, well, it feels like it's only just beginning.